Hi, my name is Aubrey Ellenwood, and this is my accounting cycle project for my Intro to Financial Accounting class. In this video, I will first explain problem number 1, which includes the October and November transactions. Then I will explain problem number 2, which includes the December transactions and the completion of the full accounting cycle. For problem number 1, I recorded all October and November transactions using the proper journal entry format. Every journal entry follows the accounting equation, assets equal liabilities plus equity, and debits must always equal credits. For example, on October 1st, when the owner invested cash and equipment into the company, I debited the cash, computer equipment, and office equipment because assets increase with debits. For common stock, I should have credited because equity increases with credits. When services were performed on the account, I debited accounts receivable and credited computer services. Revenue, because revenue increases equity. When cash was collected from customers, I debited cash and credited accounts receivable. When expenses were paid, such as advertising, wages, mileage, or repairs, I debited the appropriate expense account and credited the cash. When dividends were paid, I debited dividends because dividends reduce retained earnings. I followed proper formatting rules by listing debits first, indenting credits, and making sure total debits equaled the total credits. After journalizing the transactions, I posted each entry to the ledger accounts in balanced column format. Posting allows me to organize transactions by account instead of by date. This helps determine the running balance of each account, such as cash, accounts receivable, supplies, equipment, accounts payable, and revenue. During this step, I initially made a mistake in the cash ledger by overlooking a credit entry, which caused the running balance to be incorrect. After reviewing each entry carefully and recalculating, I corrected the balance. After posting all October and November entries and transactions, I prepared a trial balance as of November 30th. The purpose of the trial balance is to verify that total debits equal total credits. At first, my trial balance did not balance because of the cash ledger error. Once I corrected the ledger balance, the trial balance was correct, confirming that all transactions were recorded accurately. In December, I recorded additional business transactions. For example, when advertising was paid, I debited advertising expense and credited cash. When wages were paid, I debited wages expense and credited cash. When accounts receivable were collected, I debited cash and credited accounts receivable. When advance payments were received from customers, I debited cash and credited unearned revenue because the service had not yet been performed. When supplies were purchased on the account, I debited computer supplies and credited accounts payable. When dividends were paid, I debited dividends and credited cash. Each entry followed accrual accounting principles. At the end of December, adjusting entries were required to properly match revenues and expenses to the correct accounting period. For supplies, I calculated the amount used during the period. Beginning supplies plus purchases equaled $4,045. The physical inventory count showed $670 remaining. So supplies used equaled 40,045 minus 670, which equals $3,375. I debited computer supplies expense and credited computer supplies. Initially, I mistakenly entered 1,875 instead of the 3,375. After recalculating and reviewing the inventory count, I corrected the amount. For the insurance adjustment, 3 months of a 12-month insurance policy had expired. I debited insurance expense and credited prepaid insurance to reflect the portion used. For accrued wages, employees worked 4 unpaid days at $105 per day. 4 times 105 equals $425. I debited wages expense and credited wages payable. This reflects expenses incurred but not yet paid. For depreciation, depreciation spreads the cost of equipment over its useful life. Computer equipment depreciation totaled $1,450. Office equipment depreciation totaled $410. I debited depreciation expense and credited accumulated depreciation for each asset. For the rent adjustment, 3 months of prepaid rent was expired. I debited rent expense and credited the prepaid rent. After posting all adjusting entries, I prepared the adjusted trial balance. Total debits equal total credits at $115,579. Before correcting the supplies expense error, the trial balance did not match. Once I corrected the supplies asset and expense amounts, the trial balance balanced correctly. For the income statement, the 3 months that ended December 31st, 2027, total revenues was $42,599, and total expenses were $16,119. The net income was $26,480. This indicates that the company operated profitably. For the statement of retained earnings, beginning retained earnings was 0. Add the net income of $26,480, subtract dividends of $70,700, and you end up with a retained earnings that equals $18,780. For the balance sheet as of December 31st, 2027, the total assets equal $89,900. Total liabilities plus equity also equal $89,900. This confirms that the accounting equation balances. The assets include cash, accounts receivable, supplies, prepaid items, and equipment. Liabilities include accounts payable, wages payable, and unearned revenue. Equity includes common stock and retained earnings. Closing entries reset temporary accounts to 0. So first, I closed revenue to income summary. Second, I closed expenses to income summary. Third, I closed income summary to retained earnings. And fourth, I closed dividends to retained earnings. At one point, I placed a small expense amount in the wrong account during closing, but corrected it by verifying totals against the income statement. The post-closing trial balance includes only permanent accounts. Total debits equal total credits at $91,760. This confirms that the company is ready for the next accounting period. This accounting cycle demonstrates that Business Solutions generated positive net income, increased retained earnings, properly matched revenues and expenses, and accurately recorded depreciation and accrued liabilities. Correcting errors throughout the process reinforced the importance of reviewing calculations and verifying the ledger balances. In conclusion, problem number 1 covered recording and posting October and November transactions, and problem number 2 completed the accounting cycle through adjusting entries, financial statements, closing entries, and the post-closing trial balance. By identifying and correcting errors along the way, I ensured accurate financial reporting and a properly balanced accounting system. Thank you.